Market. I'm joined by Stephen Gallo, Head of Market Analysis at Schneider Foreign Exchange. Good morning, Stephen.
Good morning.
Are we just waiting to see what those GDP figures are, and what kind of influence are they going to have on the dollar?
I think, yeah, they'll be important to a degree, because we'll want to be looking at, for example, how much consumption was driving growth in the second quarter in the United States. We'll also want to see that contribution from inventories. Is it stronger or less than expected? Is it stronger than the first quarter? But I think based on the data that we've had since the end of the second quarter so far, it's a very, very clear that that inventory boost is fading. So things that are more important to me, and I think also probably more important to the currency markets, the more accurate data that reflect what's going on actually in Q3. So if, for example, later in the afternoon after GDP, we have the Chicago PMI is out. Want to see how strong or how weak that is to get a degree of how things are faring in the third quarter.
There has been a concern, hasn't there, that consumption in the US really is tailing off as people deleverage?
Well, you're right, and I think the recovery in the United States is far from being self-sustaining, and it's very clear with the data that we've had. We've already seen a correction in the currency markets to reflect that.
Are we looking really at dollar weakness rather than euro strength?
At the moment, yeah. I would say that's probably the rise in euro-dollar was more a factor for the dollar rather than a weak dollar than a stronger euro.
Now, we were looking at Sony's earnings yesterday, and there was a concern about the stronger yen, that would play a part in them. The yen up again today. Where is this yen strength coming from?
Well, I think it's coming from a number of things, but interestingly, buyers of, for example, of JGBs recently have been doing so because the fears in Japan are less related to foreign holders running on the debt. For example, foreign debt in Japan is held mostly by domestic savers rather than by foreign investors. And I think because the policies in Japan, even though the debt burden is very high and probably policies will remain very loose for a considerable period of time in Japan, there's no risk of a run on debt by foreigners, where you have that risk, for example, in the US or the UK. So I think from the standpoint of safety of principle, Japan is probably a good buy.
Just briefly, we've seen all these earnings reports which have been relatively positive across the board, and then some weak and cautious words coming out of the US. Do you think there might actually become a mismatch between what's happening in Europe and what's happening in the US?
Not so much. I actually think in this recovery, I think the U.S. is on a much more level playing field than it was in previous recoveries, and that needs to be factored into things like Treasury bond yields and the dollar, et cetera, et cetera, et cetera.
Okay, Stephen, thank you very much indeed.